incredibly broad and newer tax cuts along the way. So its impact, in our view, somewhat limited in terms of its ability to accelerate things economically. Yes, it certainly prevented things from potentially slowing down economically by making permanent the tax rates, but there's not necessarily anything new. I mean, basically, these are the tax rates that you've had since 2018. They're just continuing them and effectively making it permanent. So the rates of 10, 12, 22, 24, 32, 35, 37% income tax rates that were set now stand, and they stand permanently. And obviously that's significant when you think about the 12% used to be 15, the 22 used to be 25. And now these rates don't have a sunset. They are, in fact, permanent, which, I guess as permanent as things can be in Washington, right? The reality is that if they do change in the future, then the political party that does change them will, in fact, be tagged with raising taxes. Now, but we've certainly seen history where tax rates have kind of ebbed and flowed. Right now, they're obviously ebbed at a very, very low point, which, I guess explains why the deficit is at a really, really high point. That's probably an issue for another day. Clearly, it didn't seem to really bother a lot of people in Washington, so we will carry on in that respect. Clearly, the lower tax rates are a major impact on your finances, but the point is that since these are the same rates that you've been experiencing for the past several years, then the impact or the immediate impact or the change in your personal finances is not that material. Now, it clearly presents some opportunities of things like accelerating income in the current or next few years, because while permanent, all it takes is legislative change to change these tax rates. So things like distribution of inherited retirement accounts or maybe Roth conversions might be more in the mix, as they have been for the past few years as a result of kind of these lower tax rates. The range of income for a married couple that gets you 22, 24% is from about $100,000 to $400,000 of total income. So it's a pretty wide range. Beyond the tax rates that were made permanent and continued, what also was retained was a shift away from itemized deductions, this courtesy of the nearly doubling of the standard deduction and the elimination of personal exemptions. If you think back prior to 2018, there was personal exemptions and standard deductions, all of those